Hey guys, what's going on? This is your boy Christian Israel, and you are tuning into the New Creation Capital Podcast. Today is Thursday, April 23rd. Happy Thursday, everybody. This is a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. This is episode number 30, so we will not be going through every single part where you can find us, but this is a new you, a new future, and a new creation. You can partner with us here on the Anchor platform or send us a message, and of course, down here, the main spots you can find us are on Apple Podcasts or Google Play. And of course, you can go to Publish OX 0x to find all of our content. That includes audio and video that is on YouTube or any of the podcasts right here. This is a cryptocurrency-based website, so you can come and enjoy and see all the different things in the crypto space. Also, of course, you can hit us up on our Twitter at New Creation Cap, where we love to converse. Today's story is fire, and we won't go directly into it before we hit the news, but today's story is going to be about Bitcoin maturation lead, a nice little study put out by the Bloomberg Galaxy Crypto Index, hot off the press for April. So it talks about born from a financial crisis, also goes into stock market accelerations, Bitcoin's futures, Bitcoin gold, and showing convergence, COVID-19 supporting Bitcoin on-chain indicators dominance, and COVID-19 may give Libra life. Supposedly, we'll see, but this is going to be the story of the day. You don't want to miss this. Speaking of Bitcoin, we are 18 days from the halving. 18 days, 15 hours, and 53 minutes, and 36 seconds, guys. Less than 3 weeks away, and we saw Bitcoin make a pump this morning, as well as XLM, which shot up 12%. So we were going to those things. In the meantime, guys, let's go ahead and jump in to the story of the day. Well, the story of the day. Political put this out. I actually couldn't find much on this morning. Surprisingly, for some reason, the stock market pumped, even though these are the numbers that came out. Unemployment claims 29 million within 5 weeks into this pandemic. A 5-week wave of massive layoffs caused by coronavirus's pandemic continues, says Political Magazine. Okay, so you can go to political.com. This is written by Rebecca Rainey. As of this morning, I will put a link in the description, but it just states that 4.4 million jobless claims were filed last week based on the Labor Department reported on Thursday this morning, pushing the 5-week total to more than 26 million, which is insane, guys. So I just want to highlight this for you real quick. Let's give this a highlight, and you will see. Maybe I can't give it a highlight. You know what? Sometimes this thing works, sometimes it doesn't, but oh well. Anyway, you can see right there. So I will put a link in the description. You can go into it because somehow the stock market is going up. They like the news. They love the news of the stock market, of the jobs. So less jobs, higher stock market prices. Doesn't make sense to me, but we can go into that later. All right. I also came across this little thing yesterday. It's an article put out by the World Bank, a study put out by the World Bank, where they wanted to actually focus on getting all of the unbanked people. And this is October. You can see right here that this is October 1st, 2018, that their goal was universal financial access by 2020. And right now, guys, we are there. Their goal is here. I'll zoom in over here. Oh, let's see. Come here. No, come here. Here we go. Is to getting financial universal access to all the unbanked by 2020. And they give a little thing here. The World Bank is a technical partner for 18 priority countries to develop national financial inclusion strategies for other countries with financial inclusion commitments through the AFI Maya Declaration. So that's Indonesia, Mexico, Mozambique, the international IFC invested in innovative products. You got MasterCard here and for global payments, 1 billion accounts, 14 partners committed. This is as of 2018. So their main thing here, as you can see, I'm going to switch over to another article, is to get the unbanked. This is their goal, is to get the unbanked. And that sounds really familiar, right? Banking the unbanked. So I just want to put those out. I'm not going to go into that because these are not the main stories of the day. But you see that, guys, this has been in the works for years. This is not coming out of anywhere. Getting every single person a wallet, every single person banked. It is going to be digital. That is what they go, based off distributed ledger technology. And this article is also from the Global Finance of the worldbank.org. So I should say this is where they consider all the unbanked. By the way, this is not an article. This is research, and this is in 2017. This is in 2017 and 2018, the full DEX report, and this is chapter 2. So guys, go check it out if you want some more in-search reading. I also came across this article, the moral imperatives for banks to adopt digital currencies, written by Gokik Guavin on April 21st. I think this was on Twitter. I'll have to check the Twitter feed to see who tweeted this out and give them some props. Someone tweeted this out because I wouldn't have just came out. Anyway, this article is where I got those two other pieces of information from, and this talks about the moral compass to adopt digital currency. So go and check this out. We're seeing a lot of this push. Again, I'm not going to go through this, but basically saying it's people's ethical duty. The bank's ethical duty is to get everybody a chance to be banked. Again, bank the unbanked. Words mean things, guys. Okay, before we jump into that, let me see if I can find this on my Twitter. So yesterday, also tweeted by the IMF, when global capital pipelines freeze, a short-term liquidity problem can become deeper, long-lasting solvency problem, a liquidity line that can be a lifeline. The IMF has responded with a new facility, short-term liquidity line. So now we're hearing banking the unbanked, we're hearing debt cancellation, guys, and now we're hearing liquidity line. Sounds a lot familiar. By the way, hope you guys caught a little bit of a short yesterday. It bounced right down there, and now it's shot up. So some say long, some say short. You can find us right here and see some of our charting. If you go to tradingview.com, you can find us new_creation_capital at TradingView, and you can see some of the stuff that we are trading and look for our calls. It's not financial advice, it's just kind of what we are doing. Okay, I'll go over this specific article at the end of the podcast today. But the Federal Reserve has gone further by including junk bonds in asset purchase program, and Wednesday's decision by the European Central Bank prompted speculation that it may follow suit as early as next week when its council meets to discuss monetary policy. So I will go over that. This is from Financial Times, and it's pretty interesting because this is exactly what led to the housing crisis, the crash in 2007, 2008, and that's when the banks started buying up junk bonds, making it last a little longer and a little longer and a little longer. If you haven't watched the end of the videos, I played 2 videos at the end now by Brad Garlinghouse talking about the IMF bringing on digital currencies, right, which we see going on now, and the fact that how the housing crisis crashed based on junk bonds being bought up, and this causing the US dollar to crash and other things. So I go more into it directly in another one. Let's see here. Go more into it here, why the US dollar will collapse. We go into it in this article right here. So you can see more of it, either the podcast or YouTube, or you can also go into, which is, every time. The Big Short right here about why the banks will fail. And I just kind of touch on that. So we will touch on that article more later. Let's see. What else do we have here? Let's zoom out. This is what we're going to go over here, that central bank terminal. And I think that's pretty much everything we're going to touch on as far as Twitter is concerned. So let's jump into the story of the day. We're going to go down this article. I do believe it is 10 pages. I won't read all of it, but we're just going to go through and see what Bloomberg's crypto outlook is. So real quick, let me take a drink. I try to mix between coffee and water. I don't know why. Maybe eventually I'll get a mic. I did just get some new AirPods today. So next is coming up is a microphone in a year. Once we hit, I think 1,000 subscribers. Right now we're maybe a lot less than that, probably 2% less, or we're at 98% less. So and 98% more growth. I will get a microphone, and eventually I'll start doing video YouTubes. Right now, we're just building a channel. This is about giving information to people, and then I'll bring out our actual website, what we do, and connect all those things. So you'll see this is all going. New Creation Capital Podcast, New Creation Capital Management, all stands for not only being a new new creation in Jesus Christ, but also a new creation with the digital assets. That's why I say we don't talk about cryptocurrency, we talk about digital assets, because that is exactly what the SEC, the CFTC have named these things. They haven't called it cryptocurrency, they call it digital assets now. That way it makes it more for not the retail investor, but the actual industry, the people getting involved. Asset sounds more like an asset class. This is a digital asset class. Speaking of that, let's see what Bloomberg Crypto Outlook is based on Bitcoin Maturity Leap is the name of this. Excuse me. So we see here that this was as of April 2nd, 2020. This is written by Mike McGlone, the BI Center Commodity Strategist. And he says here, based on Bloomberg intelligence alone, I don't think I can highlight this, can I? Nope. The stock market shakeout will temporarily drag on Bitcoin, in our view, but with an outcome more reminiscent of gold's after the 2008 crisis coming into existence in 2009. The firstborn crypto was faring relatively well, down less than a quarter as much as the S&P 500 in 2020, despite being almost 5 times as risky on a volatility weighted by basis. Bitcoin's 24/7 price transparency and the lack of limits, interruptions, or third-party oversight is an accomplishment for an asset just a decade old. This year marks a key test for Bitcoin's transition toward a quasi-currency like gold, and we expect it to pass. Wow. Unlike the stock market reset, there's that reset word, but similar to gold's, Bitcoin had its shakeout, stabilizing the foundation in unprecedented global monetary stimulus and increasing adoptions. Interesting. They say it's a test that's going to be passed. Wow. They have some good outlook here. So let's move on to the next thing. Market risk with equities. It says here, post-shakeout discounts solidify Bitcoin and gold's foundation. Pricing resets for the primary quasi-currencies in this year's shakeout in equities support Bitcoin and gold price appreciation, in our opinion. Bitcoin and gold appear to be consolidating bull markets that are backing into support zones versus stocks, less than 2 months removed from record highs. It goes on to say here, oh, nope, that's the rest of that one. It goes on up here, it says, let's read the next part. Previous reset firms Bitcoin foundation. Okay. On sounder footing after its previous shakeout, Bitcoin is gaining relatively fuel as stocks reset if history is a guide. Our graphic depicts the 2020 crypto decline holding above its 2018 low, which was about an 80% drawdown from the peak. A little over a month since its all-time high, the S&P 500 has dropped below the similar bottom from 2 years ago. The global demand deconstruction from coronavirus risk is akin to equity backups. And in 2008 and 2009 and in 2000 and 2002, which were much greater in duration and on a year-over-year basis. Bitcoin and gold also stand to be primary beneficiaries of the unprecedented monetary stimulus that accompanied by mean reverting stock market. By a mean reverting stock market, it means coming to the average. Okay, here it says, let's see if I can write that. Oh well, we'll just read it. COVID-19 distinguishes Bitcoin from the rest of cryptos. The macroeconomic effects of the coronavirus accelerated Bitcoin's process of gaining value relative to other cryptos. Most of the speculative spurt in the Bloomberg Galaxy Crypto Index, BGCI, to start 2020 has dissipated. And on a one-year basis, Bitcoin is up almost 40% to April 2nd, which is actually a lot more than that because we're at 7,500 right now. So we're up a little more, probably 50%. Almost maybe 100% actually. If it hit 3,800 and now it's at 78. So yeah, around almost 98%. About a 13% decline in BGCI, which is the Bloomberg Galaxy Crypto Index. Our graphic depicts the Bitcoin to BGCI ratio recovering from a dip below its upward sloping 52-week moving average, along with what looks like a more enduring decline of the other cryptos. So here we see a chart I believe this is obviously the 50. Let me highlight this right here. It is the 52-week moving average. We're still above it. This was our dip down here, and we've moved on up. So this is Bitcoin sets continue advancing versus the rivals. So that's their actual index. Initially pulled lower by the ebbing stock market tide, Bitcoin's correlation to gold has increased to all-time highs. Unprecedented quantitative easing supports the quasi-currencies. So you can also see here, Bitcoin arresting bull amid equity plunge. They go into some more here, so you can just go over this chart here. They're looking let me see. This might be a simple moving average. I can't see what it is. It might be a 50 simple moving average here. Is this a weekly? Oh yeah, here we go. Simple moving average weekly is 86.46. So we're almost there. By the time they did this with 67.49, we actually hit $1,000 higher than that today. So we are sitting at 75.50 right now as I say this. So we're about $800 higher than that. The S&P 500 index this time is down here. I think we're kind of in this area now. So you can see that. All right, let's move on. It says here, zero negative base rates boost gold. Conditions favor advancing gold prices in our view. The primary risks to derail the quasi-currencies bull market are conditions prevalent during much of the past decade. Rapidly advancing stocks, a strengthening dollar, and rising real rates. Such conditions come on the aftermath of gold reaching an all-time high in 2011. Right now, gold's almost at the all-time high. It's sitting at 1,700. It's still got to break through. With base rates at zero or negative and Federal Reserve embarking on seemingly unlimited monetary stimulus akin to 2008, we see gold extending its 1,900 an ounce peak as the next step in a stair-step recovering process. And so here's their analysis of gold. So here we're going Bitcoin and gold. They're obviously comparing Bitcoin and gold right now. That's what we're seeing in this. So this is sitting at 1613 right now. We are actually up around the 1,700. Let me see where we at with gold right now. Let me see where are we at with gold. Gold is sitting at 1752 as we speak. So so this is about another $100 ahead too. So we're sitting right, actually looks around this peak, which is that top fund. So that's where we are sitting right now. Okay, and it says here, Bitcoin transition to gold bull from S&P bear. So here's more Bitcoin gold correlation jumps to new high. So this is correlating gold with Bitcoin and seeing that it's a 50% correlation, it looks like here. So we are moving closer and closer in direction. Again, this is comparing Bitcoin and gold. So this is a nice little article here, guys. I hope you guys are enjoying this. So let's continue. If following the script from 2008 to 2009 financial crisis, the term recovery portends new highs for gold. About 1,000 was the initial threshold then. In today's climate, it's comparable to 1,900. The 2020 Bitcoin maturity test. Stock market shakeout accelerates Bitcoin's gold-like transition. This year will confirm Bitcoin's transition from a risk-on speculative asset to the crypto market's version of gold in our view. From a volatile perspective, declines in Bitcoin's reading on the rise for the stock market shifts performance favor towards the crypto asset. And this is titled Bitcoin Divorcing Equities, Joining Gold. Increasing risk assets betas to the rapidly declining S&P 500 firm the price foundation for Bitcoin and strengthen the crypto's relationship with gold. In our view, the benchmark crypto's backup like gold's appearing temporary. Our graphic depicts the 52-week correlation of Bitcoin to gold jumping to the highest in our database since 2010. Despite spikes in most betas to stock, Bitcoin's relationship with gold is about twice that of equities. Bitcoin's maturation process from speculative appreciation toward a store of value mechanism akin to gold should continue. So we will see it continue. Then they have some, let me read. Let's see here. Did I get this? Yep. Then they have a chart over here. I don't know why, but it breaks down some of the Bloomberg Galaxy's Crypto Index. You see they're talking about Bitcoin across Ethereum Classic, Ethereum, Monero, Bitcoin Cash, Dash, Ripple, Zcash, Litecoin, EOS. Talking about its change, and they're kind of breaking it down. They also come down here and break down again. Same thing, multi-asset indices. So same thing, the large cap, kind of breaking down what theirs looks like. Bitcoin across, mixed with Ethereum, Monero, Bitcoin Cash, Ripple, Dash, Zcash, Litecoin, and EOS. So they're kind of giving us a dive into their portfolio. And so here it continues. Volatility tilts favor toward Bitcoin. Stock market volatility on the rise versus a decreasingly volatile market. Bitcoin may tilt performance bias towards the crypto if history is a guide. Despite Bitcoin and an annualized volatility, come on, mouth work. That's average about 5 times that of the S&P 500 in the past year. The crypto was down only about 5% in 2020 versus almost 22% for the stock index. Actually, crypto is now up in 2020, I do believe, if we look at the year to date, which we'll go over at the end of this video. For more established assets, this would be considered a sign of divergent strength. For the nascent crypto, it's also an indication of a transition toward gold-like adoption, maturity, and performance. So volatility is going down. As it goes up, we see that. I mean, I agree. I'd say volatility is kind of going down because we are just rise, capitulation. Few dumps like everybody on Black Thursday, dump stock Thursday. But for the most part, we are pretty consistent right now, and I can't argue. I am an XRP bull, but when you look at Bitcoin, it's hard to argue that it is beginning to hold, even though it is correlated kind of with the stock market, just a little bit, but also they're pumping the stock market full of fake money right now. So we'll see what happens. It says here, our graph shows declining 260-day volatility in Bitcoin versus an S&P 500 measure hindered by wobbly equities. Lows in the volatility spread have coincided with Bitcoin appreciation versus the S&P. So yes, the stock market is more volatile, but I guess I should say Bitcoin is used to 40-50% drops, and we've been dropping 2-3%. So we have less volatility, but the stock market's acting like crypto market. You see 30-40% drops, you see 30-40% gains, you see a 5% drop, 5% gain. That's crypto. The stock market is not used to that. So that's what they're saying there. Gold, Bitcoin have past shakeouts. A primary price appreciated benefit of gold and Bitcoin, in our view, is they are on the back ends of significant shakeouts. The 2020 mean reversion process in the stock market, with the worthy catalyst in COVID-19, may be more enduring. If history is a guide, again, they keep talking about history being a guide. It doesn't rhyme, but it doesn't repeat, but it sure does rhyme. Yet the initial drag on the quasi-currency should be temporary. They've had their resets. Our graphic depicts the stronger foundations for gold and Bitcoin after the halving corrected about 40 to 80% respectively, and remaining well below their peak. So here's the Bitcoin peak, stock market peak, your gold peak, and you can see it's all reset. You can see gold has dropped down, came all the way for a reset, bounced up. Bitcoin's peak came down, reset. Stock's peak has not come down and reset yet. So we have been saying that as well on this channel. It is not over with the stock market. Now we can go here. It says it was only a bit over a month ago the S&P reached an all-time high, which distorts drawing down analysis due to the virus crisis. On a 52-week basis, the index decline of about 14% is minor historically. In 2020, in 2000 and 2001 and 2008, the S&P dropped over 35%. Futures taming the Bitcoin bull. Bitcoin futures taming bull calf toward digital version of gold. So Bitcoin is the digital version of gold. The advent of listed futures helped tame the raging Bitcoin bull market, and we believe is part of the gold-like transition process in the benchmark gold. Increasing futures, open interest, and volume represent adoption key for the nascent digital asset with, how can I say that word, with limited supply. Futures helping to tame the Bitcoin bull. Increasing Bitcoin futures open interest represents mainstream adoption, which will continue pressuring volatility while buying prices in our view. Limited supply points demand on adoption as the primary price determines for the benchmark. Our graphic depicts the upward sloping trend in Bitcoin futures, open interest, and price taming process. The swiftest stock market decline in a generation has pressured Bitcoin back to its most widely traded price area since inception of futures, just below 7,000. So here we go. Increasing futures, open interest adoption. So we see that the adoption is going up. Futures interest is going up. And so it's open. Increasing futures open interest, declining volatility, and relative outperformance despite the stock market shakeout indicates Bitcoin is maturing from a speculative crypto asset towards a digital version of gold. There it is again, digital version of gold. On a one-year basis, Bitcoin is up about 40% versus 15% decline for the S&P 500. Raising future volume in Bitcoin maturation. Increasing Bitcoin futures volume represents taming of the high speculative bull market in our view. Up about 120% over year and first quarter, the increase in the CME Bitcoin futures contract traded reflects a maturing market. The firstborn crypto has recovered from the depths of the bear market over a year ago, and the advent of listed options traded indicates more mainstream adoption. Our graphic depicts the 30-day average of futures volume stabilizing with Bitcoin at price. So here's the futures settling, Bitcoin into range bound, another graph for you guys to look over on your own. All right, Bitcoin gold convergence. Bitcoin and gold showing convergence with endurance. Divergent volatility readings historically supported Bitcoin appreciation. The firstborn crypto trend is toward gold-like appreciation. Unlike its much more volatile early days, declining Bitcoin volatility versus rising readings for the mental signal stronger championship. Bitcoin volatility converging with gold. Rising gold versus declining Bitcoin volatility should support the crypto's price. Our graphic shows Bitcoin's declining 180-day volatility versus an increase in gold's reading, similar to 2015, when the Bitcoin to gold ratio bottomed and commenced the bull market to the 2017 peak. I'm seeing some. They're saying it's coming the same. That means they're calling for a Bitcoin bull market. Natural maturity should continue to pressure the firstborn crypto's volatility. Yet, when volatility bottoms, it typically coincides with recovering prices. Here we go. Volatility falling and Bitcoin rising in gold. It says here, gold's volatility is on the rise from the two-decade low in 2019, along with advancing prices given it fuel for potential continuation. Bitcoin's volatility should continue declining towards gold's. The 180-day measure is significant, as its all-time low for Bitcoin in October 2015, about 40%, marked the beginning of the bull run. That's where we are right now. All right, so let's zoom over here real quick. It says, Bitcoin becoming less of a risk on asset. Bitcoin price pressure from plunging stocks will prove temporary in our view. When the S&P 500 declined almost 14% in fourth quarter of 2018, Bitcoin declined about 45%, and both bottomed about the same time, indicating the firstborn crypto is still susceptible to receding stock market tides. So saying there is a little bit of a connection here that when the stock market crashes, we see Bitcoin still kind of go boom. And we saw that again on Black Thursday. Indicating, let's see here, but in more of a bullish diverging condition. Bitcoin remains up about 9% in 2020, more than that now, and is hovering near its 8,000 support level. Yeah, that's kind of where we are actually as I read this. Despite about a 20% S&P 500 correction. Our graphic depicts the spiking nature of the correlation between Bitcoin and the S&P 500, notably when equities decline swiftly. So here we go. Just take a look at that. You can pause and check the screen out and look on your own. Okay. Favorable Bitcoin on-chain indicators. COVID-19 supporting Bitcoin on-chain indicators dominance. Bitcoin on-chain indicators remain price supportive, and the coronavirus is accelerating the firstborn's outperformance versus the broader crypto market. Metrics including addresses used in adjusted transactions, showing a firming Bitcoin foundation. Cutting the daily mining supply in half in May, which is 18 days away, will provide another price tailwind in our overview. Bitcoin discount versus on-chain indicators. Bitcoin appears to be discounted versus its primary on-chain indicators. Represented adoption, the 30-day average of active addresses has stabilized closer to $9,000 versus about $6,600 on April 2nd. Again, we're about $900 higher than that on April 2nd. We find the 10-day average of transactions to be a more robust grading proxy, and it's about even with the price on the auto-scale basis since first quarter 18. These blockchain measures from Coinmetrics support a key price detriment of the determinant of the limited supply crypto benchmark, increasing adoption. Increasing addresses support Bitcoin's transaction toward a digital version of gold. We believe margin call related selling should be a temporary headwind on both quasi currencies. All right, see here. Next. Let me see how much of this article is left. Okay, yeah, almost done. All right. I can read these next 2 pages. So here we have, there's the uptrend in addresses and transactions right there. We see that, basically what they just said. Let's see what the outlook is. COVID-19 may give Libra life, spur Fed's digital currency. Yeah, whatever. We'll see what they say about Libra here. I just kind of told you how I feel about Libra. Facebook gets hacked all the time. I'm not down for giving them any of our money or any of our clients' money, period. COVID-19 may highlight vulnerabilities in cash-based transactions and markets built on outdated technology, driving the Fed to reconsider issuing a digital currency, giving Facebook's Libra new life and prompting mortgage lenders like Wells Fargo, Truist, and U.S. Bank to seek tech upgrades. A Fed digital currency or payments app may undercut bank fees. It's interesting here. Well, we're going to see where this goes. I know where this goes, but we're going to see as an audience, because here they're talking about Libra being something the banks work with. There's another little fintech company out there, isn't there, guys? Virus highlights, by the way, and we know Wells Fargo already works with them and U.S. Bank works with them too. So anyway, virus highlights tech gaps, gives rise to opportunity. The coronavirus may narrow investors' focus to new blockchain technologies that address vulnerabilities that arose during this outbreak. Even with heavy investment, there's been a conspicuous lack of commercial results in blockchain, but the mass work from home experiment of early 2020 could catalyze new developments. Investment in the space tends to exhibit circular logic where money chases addressable markets that are already well served or protected by regulatory moat. So here's the VC batch chain, fintech deals, financing. I'll let you look at that while I take a drink. Saying it was at 20.8 billion, now it's at 8.9 billion as of quarter 3 of 2019. We see mortgage market as potential fertile ground. So the mortgage market, that's what they're looking at, given stresses that arose and investors began to consider possible wide-scale forbearance and a grinding halt in organizations. Contactless transactions, not just payment, and the primary of data ownership may also come into focus. So we know that this is a month later, so there's a lot more going on right now in the market. Here we go. Central banks' cryptos may compete with Libra. Bloomberg's still on Libra. I'm curious about this. Commercial banks would largely play a key role if the Fed and other central banks decide to go cashless by issuing a digital currency. We know that's coming. We've seen the bill. I talk about that bill, by the way. Talk about that bill right. Let's see that right here. Episode 25, we talk about that bill, specifically the ABC bill. Okay. So if non-banks could access central bank money directly, it could create unintended consequences for the Fed and disintermediate commercial banks' role as credit creators and maturity transformation machines. The coronavirus-induced economic slump may spark the Fed's interest in a tool that could provide more direct stimulus beyond just financial markets, though legislation would likely be required. Just talked about that. Here is Bank of International, BIS, Bank of International something. I forget what that BIS stands for. But anyway, this is about the central banks, place in global finance, and we're going here. Central banks issued, Bank of Amsterdam. I'll let you guys. I'll let you look at that. You can pause it and look. Okay, moving on. Central banks may also adjust their strategy if private. Hold on one second. Okay, here we go. Central banks may also adjust their strategy if private permission ledgers such as Facebook Libras begin to gain steam. The Fed may need to be more open to regulated private money if alternatives such as Bitcoin come through the coronavirus crisis stronger than before. Here we go. Wholesale digital tokens. My mother is calling me and texting me. Let me text her that I will call her when this podcast is over. call you when I am done recording my podcast. By the way, you always have to text your mother, I love you, because that's your mother. So guys, text your mother right now, you love them. All right, let's move on. Wholesale digital tokens may reshape bank liquidity. Wholesale digital tokens based on blockchain, like JP Morgan's proposed JPM coin, could transform interbank payments in 2020. Once better understood, the liquidity issues experienced during the coronavirus outbreak, especially in mortgages, might be addressed using some application of the blockchain. A first mover advantage likely exists for a large bank to create a dominant settlement platform that more efficient and less costly, to the extent of wholesale tokens represent claims on haven assets like US dollars, central bank reserves, or treasuries. We think regulators will encourage technology innovations in coming years. I think that's interesting because, again, they talk about JP Morgan, and we've talked on this channel before where people have put, including the IMF and other research, JP Morgan and Ripple's XRP in the same sentence. Here, they're talking about Libra and JP Morgan. They're leaving out XRP so far. All right, so let's move on to the last page of this model. All right, so here it is, the BIS stylized model of token arrangement, how they figure out Bank A to issuer Bank B. That looks very familiar. It looks just like a interoperability, doesn't it? Tell me that doesn't look exactly like an XRP model. Ripple's model's right here. That is literally Ripple's model. Anyway, okay. Wells Fargo, XRP. They work with XRP. JP Morgan, they have their own coin. Bank of America works with XRP. US Bancorp works with XRP. Truist works with XRP, and Citizens works with XRP among top 20 mortgage lenders and might benefit from blockchain mortgage tech. Just going to point that out there, that this Bloomberg seems not to be mentioning XRP. I wonder why. Who owns Bloomberg? Anyway, blockchain project announcements were everywhere in recents, yet the hype failed to pay off. Oh, here we go. Ripple's Labs 2019 partnership with MoneyGram, also with Western Union, suggests markets will see potential for disruption in cross-border payments, yet Ripple's exposure to its own cryptocurrency threatens enterprise software. FUD. So right there they're saying they don't believe in Ripple. This specific Bloomberg doesn't believe in Ripple. Well, they didn't believe in Bitcoin either 5 years ago. Ripple's exposure to its own crypto. Okay, the project's investors include MasterCard, Visa, Capital One, Citigroup, Bank of America are likely just hedging. Ooh. FUD. Microsoft and IBM, backed by JP Morgan and Wells Fargo, so are competing to bring blockchain to markets infrastructure. By the way, Microsoft works with Ripple Labs. IBM also works with Ripple Labs and Stellar. Just pointing that out. I can see. Okay, here's some key points. Few projects are posed to replace existing infrastructure. Distributed ledger. There's that word again. Distributed ledger technology, we know that's Ripple. Implementation more likely to come from internal R&D efforts. Governance, scalability, standardization, security concerns provide healthy moat around existing infrastructure such as SWIFT. We know that the R3 platform corridor and XRP is also working with SWIFT to produce real-time payments, security clearing and settlement, cross-border payments, and less liquid markets may get blockchain updates. It says additional reading, Facebook Libra white paper, Swift on distributed ledger technologies. That's DLT. That's what Ripple Technical Papers is. I don't have the Bloomberg platform, so I can't click on those and read those to you guys. If you do, you can click on those are clickable links. Central bank wholesale payment system tend to act like blockchains but are in need of an update. Swift was breached in 2016 using just a fax machine. NASDAQ, Intercontinental Exchange, CME Group, and other exchanges which operate on centralized ledgers won't be unseated. And then it goes in here and let's see. Common standards and platforms for bank exchanges use blockchain technology for large-scale. Any new system would attract withering scrutiny from the government regulators. The U.S. Treasury Department and Federal Reserve closely monitor financial markets, infrastructure, and designate key systems on financial market utilities under the Dodd-Frank Act. FMUs are regulated so stringently they become quasi-governmental utilities or are mutually owned by participants. Again here, blockchain-based clearing settlement on payments network could be designated a financial market utility. These are key points. Financial market utility regulation includes federal rules on risk management, examinations, and enforcement actions, and special Federal Reserve accounts or account status. Private enterprises interested in creating stable coins, we talk about stable coins, reserved by safe government assets have a long way to go, in our view, to overcome bank regulators' concerns about the creation of money-like assets outside of the commercial banking system that are susceptible to runs. So we heard them already talk about people banning stable coins. We know that XRP has been working, Ripple Labs specifically has been working with the regulators since the beginning to do distributed ledger, also working with the banks mentioned, also working with SWIFT. So they're basically saying, and here by page on Bloomberg Terminal, so we can see right here, their top, this must be their holdings, because you got Bitcoin, Ethereum, XRP, Bitcoin Cash, Litecoin, EOS, Monero, Dash, Ethereum Classic, Zcoin, CME's Future. So this is kind of their platform that their cryptocurrency currently monitoring. And then on this last page here, they're just kind of going through their data and tracking it. Based on lasting growth, you can pause and slowly look at this yourself because this is the end of the article. So, wow, what do you guys think about that? Do you believe that what they're saying here, that they believe Bitcoin is basically gold, that it is gold for cryptocurrency? That's interesting there. They're comparing Bitcoin to gold. So let me know in the comments if you guys have made it this far. Hit the like button, please. Put a comment in the bottom. Follow, subscribe. Please do those things, so that really helps this channel if you are liking the information. I'm going to attach one more article for you here that just kind of goes, that we talked about. European Central Bank loosens collateral rules to accept fallen angel bonds. I'm not going to go into this. Basically, they're buying junk bonds, and I talked about that in our Twitter. I'll put a link to this article below. Before we close out, let's see what's going on here. Another quick article for you. S&P 500 companies spent $7 trillion on buybacks and dividends, been rewarded by coronavirus bailouts, says Social Capital CEO. And we know I can't pronounce his name, but it is Chapman. We'll call him CP, but you recognize him. He's the guy who said, let people fail if they don't know what they're doing. All right, so that is the story of the day. Before we close out, let's check in on what is going on specifically in Bitcoin. We've had a retest here. We had a breakout, as you can see, of our chart. I had the falling wedge, came down and touched, like we said, rebounded at 7,000, shot up here to 77.93, retraced. Now it is sitting around 75.09. This is where I'm specifically looking at entries to see what goes on. Let's see what's going on in intraday. Right now, we are sitting at the Dow is at just up. Oh, that just dropped 0.19%. S&P is now down 0.06%. The NASDAQ is now down 0.7. You can see this literally going down as I speak. Gold is up 0.89%, and oil is up 28.37%, sitting at 17.73% on the day. All right, let's check out the other cryptocurrency markets before we go. Let's see here. Bitcoin is sitting at, let's get a reload. Let's get a reload real quick before we go. Are we reloading? All right. So Bitcoin is sitting at 75.38 right now overall, up 5.92%. Ethereum up 3.4%, sitting at 189. Ripple up 4.18%, sitting at 19.6 cents. Bitcoin Cash at 2241.8, up 3.68%. Bitcoin SV 3.61%, and Litecoin 2.94%. EOS up 3.62%, sitting at 2.7. Binance Coin, I remember that was at $25, sitting at 16.19. That might be a good call there. Tezos up 7.27%. The staking coin is what I like to call it, sitting at $2.50. And those are your top 10. So real quick, we are 18 days from the halving, guys. 18 days from the halving. 18 days from the halving. So before we go, I'm going to read you a quick scripture, and then we will get out of here. This is going to be from 1 Timothy Six. Let's see here. We're gonna go 6. Yep. But godliness with contentment is great gain. For we brought nothing into this world, and we can take nothing out of it. But if we had food and clothing, we will be content with that. Those who want to get rich fall into temptation and a trap into many foolish and harmful desires that plunge people into ruin and destruction. For the love of money is the root of all kinds of evil. Some people, eager for money, have wandered from faith and pierced themselves with many griefs. So guys, again, that's not saying money is the root of all evil. The love of money is all root of all evil. So if you are content with what you have, that's it. Again, this is an investment channel and a news channel. We push and understand and educate people on what's going on in the finance world, but understanding money is not everything. It is not our root. Love in Christ is the root of this company, point blank, period. Everything else comes and goes because we are born with nothing. We will live with nothing. So if you guys made it to the end of this video, guys, please give this video a like. Follow us on Twitter at New Creation Cap. Really appreciate it. Of course, you can find all of our information on Publish 0x, the cryptocurrency platform. You can find everything. Again, my name is Christian Israel, and you are tuning in to the New Creation Capital podcast. This is a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. Guys, this is not financial advice, but as we like to say, make sure you buy low and sell high. This is a new you, a new future, and a new creation, guys. Until next time, guys, peace and love. Later.
Can you see those? Oh, there's 2 votes.
Let me try.
Do you see IMF holding crypto assets in the future? Oh, they're over here. That's easier. You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe
the
I
IMF.
should take what the IMF is going to do. I think we stunned Ross into silence with that one.
For that to happen, okay, under the current legal framework, some country would have to use a crypto asset as its currency.
Which goes to the next question that was on the list, actually. Will central banks issue digital currency become a reality in the next few years?
Well, again, there's a lot of work being done this through by a number of central banks in different, regions of the world. I think generally speaking, many of these central banks are coming to the conclusion that they don't see the benefits right now of doing it, but they're very seriously considering the use case. And I think as work proceeds, they maybe become the possibility may increase. Particularly the Bank of Canada with its Project Jasper experiment has realized that a central bank digital currency on its own may not offer benefits now, but when combined with other things like the security settlement system, the use cases begin to emerge. So let's keep an open mind.
Hi, how are you? Okay, Mr. Bennett, what do we have?
Let's see what you got.
You smell that? What is that?
What?
What's that smell?
A cologne?
No.
Opportunity.
No. Money.
Okay.
I smell money.
Okay.
Chris.
Damn it. Sorry.
This is your basic mortgage bond. All right? The originals were simple. They were just thousands of AAA mortgages bundled together, guaranteed by the US government. The modern ones are different. They're private, and they're made up of layers of tranches. The highest level AAAs getting paid first, the lowest rated Bs getting paid last, taking on defaults first. Now, obviously, if you're buying Bs, you can make more money, but they're a little risky. Sometimes they fail. Chris? Somewhere along the line, these Bs and double Bs went from a little risky to dog shit. Where's the trash?
Behind you.
I'm talking rock bottom FICO scores, no income verification, adjustable rates, dog shit. The default rates are already up from 1% to 4%, fellas. And if they rise to 8%, and they will, a lot of these triple Bs are going to 0 too. And that, you're too close, is an opportunity.
Okay, you're saying that at 8% the bonds fail and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right.
How come nobody's talking about this?
You're completely sure of the math.
Look at him. That's my quant.
You're what?
My quantitative. My math specialist. Look at him. You notice anything different about him? Look at his face.
That's pretty racist.
Look at his eyes. I'll give you a hint. His name's Yang. He won a national math competition in China. He doesn't even speak English. Yeah, I'm sure of the math.
Actually, my name's Jiang, and I do speak English. Jared likes to say I don't because he thinks it makes me seem more authentic. And I got second in that national math competition.
So you're offering us a chance to short this pile of blocks? How?
With something called a credit default swap. It's like insurance on the bond, and if it goes bust, you can make 10 to 1, even 20 to 1 return, and it's already slowly going bust.
10 to 1, 20 to 1? No way.
And no one's paying attention. No one is paying attention because the banks are too busy getting paid obscene fees to sell these bonds.
But wait, you are the bank. When you work for the bank, I bet your margins are pretty nice and fat.
Let's not talk about my margins, by the way. Being nice and fat, that's a nice shirt. Do they make it for men?
Aren't you the bank?
I work for the bank. I don't think like a bank. Big bank, small bank, I like to make money. All right? Let me put it this way. I'm standing in front of a burning house, and I'm offering you fire insurance on it. A's, 0. B's, 0. Double B's, 0. Triple B's, 0. And then that happens.
What is that?
The US dollar